All right, time for the word on Wall Street. Top investors watching your money this morning. MJP Wealth Advisors President Brian Vendig, Constellation Research CEO Ray Wang, and the Fitz-Gerald Group Principal Keith Fitz-Gerald. So I want to switch gears and move to Keith for a moment because Snap shares tumbling this morning. They announced plans to lay off 20% of the workforce. Two senior executives also heading to Netflix. Stock down 79% year to date. This is just another company in the tech industry saying we're going to have to lay people off. This is a big concern for the market as well.
Well, it is, but, respectfully, I would push back just a little bit. All tech is not the same. There's a huge difference between tech like Apple and Microsoft and tech like Snap, for example. Snap, I think, is a $2 company. It is flailing. It's in desperate straits. Two of its executives got poached. It's laying off the very employees that would prospectively look at generating new apps and new revenue for the company. So it's taking its best players off the table in an attempt to survive. So that, to me, is not a stock you want to buy. On the other hand, as the markets continue to deteriorate, for example, the stocks like Microsoft and Apple are the ones you want to go to because they're going to survive and they're going to continue to invest through this.
I hear you. Not all tech is created equal, and you're 100% right on that. But with respect to Apple, which is one of, the blue chip companies, guidance has been cautious. And I believe Apple was one of the companies who said it's not going to be as aggressive on hiring as it would be. So they haven't necessarily laid people off. But you're seeing this trend, this theme of slowdown in the tech industry, which, Ray, really worries me. It's also worrying investors because that's the first place that they go when they want to hit the sell button right now. Where are you looking to invest in this macro environment, given all these conditions and everything that investors have to watch?
Jackie, it's a great point. One of the important things is to think about which tech is doing well. We like cloud companies. We like cybersecurity companies. We like the companies that have great cash balances. Salesforce is a good company. We need to look at them because there's a lot of growth in CRM. They overtook SAP in terms of being the largest revenue in the enterprise space. Adobe is another great company. They've got a lock-in on the creative side and, of course, in terms of marketing and consumer experience and software. And if you're thinking about what's going on with Adobe in general, they've got a broad reach on the creatives as well as the enterprise. And, of course, Microsoft looks really good right now because they've got the cloud, they've got the gaming coming towards the fourth quarter, and, of course, if you think about, overall, they've got a lock on office productivity. And those are stocks that are going to be here for quite some time.
Yeah, if you're set to hold for the long term, Ray, I mean, the stocks that you mentioned seem to be a good bet. And a lot of investors are trying to, not think about the day-to-day volatility, put a long-term strategy together. It seems to be one of the only things you can do in this environment. Brian, Ray, Keith, great to see you all this morning. Thank you.
Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below. And of course, click subscribe to keep up right here on YouTube, or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.